Hello, welcome to episode 9 of Real Estate with the Carters. I'm Annalyn Carter,
And I'm Christopher Carter.
and together we are the
Carters.
Carters. Welcome, everyone. Thanks for joining us. We are filming our 9th episode today,
Right.
and we've been doing great, getting a lot of great feedbacks,
Right.
getting a lot of comments, and we would love to thank you for supporting us. Continue to subscribe and to leave comments on here. And anything else, baby, do you want to add before we get into the show?
Just to ask you to continue liking, subscribing, share our videos with your friends and family. Also, we're starting doing some shorter version of our videos, so you can just stay tuned for those, and also like and share those, and just continue to comment and support us as we try to build this channel. All right.
Yes.
Without further ado, let's jump into today's topic.
Right? So we're going to give an update on the housing market, and we're also going to talk about the end of the housing market as we've seen it in the last 2 years.
Okay.
Okay?
Definitely.
All right.
All right. All right. So over the last 2 years, right, since COVID in
COVID.
2020, the latter part of 2020, early part of 2021, it was just crazy. That I call that period a crazy period.
Agree.
it was
Bizarre.
it was crazy. So just recapping that period, it was marked by very long lines at open house.
Yes.
Right.
Yes. And they also had a low interest rate of what, 2%?
2.5. That's a very low
Yeah.
interest rate.
Which we think lasted way too long.
Way too long, definitely.
Right.
And then another issue was PPP money.
Right.
There's a lot of PPP money flowing, so people who previously would not be able to buy a house now just find themselves now with deposits and closing. And that kind of spiked the market and kind of caused a crazy period, as I call it.
Right, most definitely. And also, we see houses that once they go into MLS, they're in contract with less than 5 days. Like you put something on the, you list something, and the next thing you know, in 2 days, you have an offer already on the table. Multiple offers there.
Definitely.
May I add, yeah, multiple offers.
There are times
right?
even when it seems like it went on a contract before it actually went on
Oh,
MLS.
definitely, yes.
You call the day it went, you see it on the market,
Market.
and you're told they have 10 offers.
Yes.
I mean, where did these people see this property?
Right,
This was
right.
just really crazy.
Yeah,
Buyers
there-
were waiving inspection.
Yeah, there were situations like exactly buyers were waiving their inspection,
Right.
buyers were waiving the appraisal. There was no appraisal contingency, so whatever
Correct.
the property was appraised for, buyers were willing to pay above
Right,
that appraisal amount.
Yeah.
We had multiple cash buyers,
Multiple cash
right?
buyers,
And cash
right.
buyers, they weren't low. These weren't like low offers for cash for the cash
no,
buyers,
no.
right?
These are people moving from California, from New York, Connecticut, Boston. And these people were coming here. I mean, I don't know where they got those kind of monies. And properties that were usually selling for like 300,000-400,000, just overnight 500,000-600,000.
Most
It was
definitely.
it was definitely a crazy period.
Yeah.
And so one of the things that period was marked was a seller's market.
Definitely attributed
Right.
to it being a seller's market.
That was a seller's market. Sellers were not
Yes.
willing to negotiate and nothing.
at all.
If you don't like it, that's fine. We have 10 other people lined up willing to buy this property.
Right.
And so it put buyers, especially the first-time buyers, at a disadvantage.
I agree.
Because they were not able to compete with what was going on in the market, and most of them got discouraged and kind of sat sitting back on the sidelines, just
Definitely.
waiting for things to start coming back down, right?
Yes.
Thank God we've kind of passed that somewhat.
Somewhat. I would say somewhat. We're creeping out of that era.
Definitely, we're
Yeah.
definitely moving from that, and
Yeah.
so it's let's talk a little bit about the current
current
situation.
situation,
Where we're at right now. So we're seeing that the home prices are still high,
Right. They're still at a record high,
and
especially here in South Florida.
especially in South Florida. And a lot of people, a lot of our clients are asking, why hasn't the price come down? And we're gonna be addressing that further on in the video. But that's a big issue right now. Is that interest rate is high, but price is also high too.
Right.
And because of those two combinations,
Right. And the inventory is still low.
and the inventory low. So it's
Combination of all three.
the combination of that is that we're seeing prices being steady in some instances.
Right.
In most instances, prices seem to be holding steady, especially
Mm-hmm.
there in South Florida. And if the property is very nice, very desirable,
Move-in
turnkey,
ready. Right.
we're seeing those still in some instances going
Right.
above asking, right?
Yes.
Now interest rates are in the mid 7%.
Right.
Yeah. Inventory, as we said, is as an all-time low. So it's very low inventory at this time. High interest rate.
And I think too, like the uncertainty of what's going on with the
Right.
economy, like there's a
Right.
gridlock, so people aren't really
Right.
making a lot of moves. They're waiting to
Right.
see what's the outcome of the upcoming election,
Correct.
right?
Right.
So there's just a little, it's unstable at
Right.
the moment.
And we may be having a pending shutdown of the government with what's going on in Congress. So those are kind of bringing some unease in the market. People would normally move at this time.
Especially this summer, we didn't see a lot of movement as we
No,
typically do in the
definitely
past couple
not.
of years before,
Definitely
right?
not.
So we've seen that
Right.
people are being a little bit more cautious.
Yeah,
Exactly.
definitely.
They're being more cautious.
Right. Right.
We do have instances where sellers are willing to negotiate now, like you said, because the housing market, the price is like kind of stagnant.
Right.
There are people who definitely do have to sell. So those people who have to sell they're able to negotiate, or they're willing to negotiate.
More willing
They're
to
They're willing to negotiate.
In fact,
right?
I've done a couple of deals in the past week or so where I've seen the seller giving closing costs, full closing costs. We're seeing, because homes are staying on the market a lot longer than, say, a year ago, 2 years ago.
Right.
Right. And so because of that, sellers are, I wouldn't use the word panicking, because they're definitely
No, I
not
think
panicking
being
yet.
cautious.
But it's just that if you definitely want your property to move faster than normal, then you have to give the buyer some incentive to
Right.
buy your property.
You said like to help buy down the interest rate, right?
Right.
Not only
right.
sellers, like you see builders or developers that are also
Oh my
doing
God!
that,
Right. We did a couple deals recently with we're not going to call their names, but they're offering
Like
like
almost
crazy.
Can I say the amount?
They offered one of our buyers
20,000 towards their closing costs.
towards their closing. So
Yes.
as it is right now, is that because inventory is so low, right? But rates are high, prices are high, buyers are a little bit cautious.
Yeah.
And so to induce the buyers to kind of move, most of these builders are literally
Trying
giving
to get
them
them
everything.
incentifying the buyers.
Right. They're giving them, you may get a wife or a husband if you go to one of these buildings. They're just they're literally
funny.
giving the buyers everything. All right, but it's kind of good, because what we're seeing is that that is creating some activities in
Right.
the market, right? We're also seeing in some instances price reductions.
Yes.
Right, that was something unheard of in the last 2 years, but we're seeing that's
Right,
the
because the
prices.
sellers are being they're realizing that these the original listing price where they probably were asking over market value, right? That the property
Right.
isn't moving, so they have to in turn reduce the price, because it's
Correct.
not like when Chris says like
It's not the crazy period,
right the beginning of the pandemic where you were asking, I don't know, 600,000 for a 4-bedroom home that probably needs some work. It's
Right,
not that
right.
we're not in that
Yeah.
market anymore.
People are willing to buy. There are still buyers that are in the marketplace looking for home, but there has to be value.
They're exactly
Right, they're not going to buy a fixer upper for 700,000.
Exactly.
It's not warranted. So definitely we're seeing a shift towards a buyer's market. I don't think it's a buyer's market yet.
No, not
We're not
completely.
we're not seeing that complete shift from the seller's market. We're somewhere in the middle, I believe.
Right.
But both sides are getting something from it now. Previously, it was just the sellers that were all, holding all the cards. Now we're seeing buyers are going in and asking questions and asking for stuff to be done. And we're seeing sellers are a lot more willing,
Right. They're more flexible.
right? A lot more willing to say, let's consider
let's
doing
negotiate.
more. Let's negotiate.
Yes.
All right. Now, so the question that most people have on their mind is, why are prices
Prices so high.
Why the heck are prices so still high?
Because you have people, like we mentioned before, that there's still the prices of they have probably a lower interest rate. I would say
Right.
maybe less than 4%.
There's a lot of people that have interest rate led between 3 and 4%. That big, about, I think it's 65% of the current loans
Okay.
are within that band of interest rate between 3 and 4%. And so one other thing that we're noticing too is that those people would have normally downsized. Say someone who was retired, they're empty nesters, all the kids are, been to college and they're now on their own. So I have a 5-bedroom, 2-bath, and it's just me and my wife, for
Right.
instance. And typically that person would be a prime person to downsize.
Right.
And but now, if they try to downsize, they may be locked into a higher payment than they were for a smaller property, because one, the prices are higher and the interest rates are higher. So these persons, these persons who have normally shift to downsizing or staying put.
Right. Because it doesn't make sense.
It
for
doesn't
them.
it doesn't make financial sense. If you have a 3% interest rate, why would you, close out that mortgage to go take up a 7% mortgage?
Right.
I mean, for most people, that equation just doesn't make sense. And what you're finding is that most of those people are just sitting back and just waiting,
Right.
and that is causing now that very low inventory.
Right. And then you see, like you in term, so therefore, then you have less people applying for mortgages.
And they're right. So mortgage application has been at a 20-year low. What that means is less people applying for mortgages. And with less people applying for mortgage, it means less people are buying homes.
Right.
And if less people are buying homes, and if there's a low inventory, then prices are going, because for prices to come down, what we need to have happen is more homes. We need more homes on the market.
Right.
More sellers. The supply side of the equation has to be more than the buying
Right.
side. In what we're finding now is that both of them are low at the same time.
Right.
So the supply is low, but the buyer's demand is
also
low.
low.
So you find that price is stabilized almost, right? So what we need to happen is we need price. We need
You need
interest
more,
rates
so-
probably to start ticking down for some of those empty nesters to start putting back their properties on, to put their
them
properties on the market.
Right.
Right?
I
We
agree.
definitely need some of that kind of to get inventory start moving back in the direction that it needs to be, so that we can see the prices coming down. Because if interest rate comes down in the too low, we're gonna go back to the crazy period,
Oh, most definitely.
right?
Most definitely.
So we definitely don't want interest rate to come down too sharply.
Right.
Because if that happens, and with the inventory where it is, we're gonna just go back to. So we want inventory to come down first before
But
interest
how do we
rate.
for the more inventory to be on the market, then the people have to be comfortable and right, and
So yeah,
right,
and
to want to
it's
sell their home. 'Cause,
right.
like there's no uncertainty. If I sell my property, what is it? What am I gonna buy?
I don't know. And that is it. So 70% of our current mortgages are less than below 5% interest rate. So most of those people, they're not going to move anytime soon,
Right.
because if you have less than a 5% interest rate at today's date, you're not going to exchange that mortgage for a
For
7 or 8%
7%.
interest rate.
No, not at all.
It's not going to happen. Most sellers that we talk to, their number one question: if I sell, I can't afford
For
to
to
buy.
buy. Yes.
That's their number one concern. Is I'm willing to sell, but then I won't. Where am I going to live?
Right. They feel like they're trapped into their
and
homes.
and
right?
and essentially what that is, it's like they're in a golden and handcuff.
Golden handcuff. That's a good terminology
Right.
for that.
They're almost tied to this home now, because where are they going?
Right.
They can't afford, and even if they think about it, and even if they really want it to, unless there's a must,
Right.
most
Said, right.
most people are just gonna
They're compelled to sell their property.
Yeah, they have to be in a situation where it has to go.
Right.
They're either divorced, they lost their job, or one spouse, one of the partners die, and I can't afford it on my own. But it's in a bad shape.
I
right?
agree.
And we don't see any major changes in the next couple of months, because of with all that uncertainty, with the election less than a year away, or a little over a year away, with the deadlock in Congress, Democrats and Republicans seem to not be able to work out anything together. There's just so much uncertainty that if I'm a
you're a
seller
seller.
right now, unless I'm forced to sell, I don't know if it is really practical to sell at this time.
Right.
All right.
Okay.
We're going to go to a quick break.
Okay.
Going to
Then
pay
we're gonna
some
come
bills.
back.
And then, stay tuned. We'll be back shortly.
Okay.
Life is full of challenging decisions. Finding the right mortgage company should not be one of them. We at Loans Hub Mortgage and Finance are leaders in residential mortgages, refinancing, and investment property financing. We have a loan solution for your every need. Call us today at 954-947-8662, or you can find us online at www.loanshublending.com. Your next approval is just a phone call away. Loans Hub is an equal housing lender and MLS 222-0747.
Welcome back to episode 9 of Real Estate with the Carters. I'm Annalyn Carter.
And I'm Christopher Carter.
All right, in this segment, we are going to talk to the buyers. We're going to give you some of our recommendations that we think that you need to do in order to navigate yourself through this market. Okay.
Definitely.
So the first thing is to have patience.
Yeah, I don't think we can express that enough.
Yeah.
Just be patient. You may think that you have to buy right now, and it may be possible that you're in a situation where you need to buy, but it's still not a buyer's market. And so you're gonna come up in a situation where there are multiple offers.
Yes.
There's still multiple offers on certain properties. If properties is desirable, there's gonna be multiple offers.
Yes.
So you have to be patient. It's not gonna be your first week going out or your second week going out. It may take a month. It may take 2 months. But,
I agree.
just be patient.
Right. Also, you have to stay within your budget, right? So whatever it is that you got approved for, try to stick within that budget, because it's not like Chris says, if it's a property that's desirable, you're gonna have to definitely offer more. So whatever it is that you got approved, just try to stick within that budget.
And just to add to that too is, even though you're approved for 500,000, doesn't mean you have to spend all of that 500,000. Does this payment make sense regarding my budget?
There you go.
Right? If I'm paying rent, say 2,500, I know my mortgage payment is 4,000. Is that extra 1,500 something that I can afford? Right?
Definitely.
So what we're saying is, make sure that you're comfortable with your mortgage payment.
Yes, definitely.
All right.
Another thing is to be flexible. Most people want to stay here. I'm going to use South Florida, for example. A lot of people want to be here in South Florida because it's close to the beach. There's so much things happening here.
Yeah.
But you probably want to be flexible in terms of like going north. Go a little further north or a little further south, right?
Correct. Homestead.
Come out of that comfort zone that you're in, because like you said, you want to purchase something within your budget that you can afford. So
Right,
that
right.
means maybe moving north or moving south,
Correct.
right?
So it may not be the
Not in
desired
the
area
area.
that you want to be in. Like, it's not Miramar, it's not Pembroke
Right.
Pines, but you could go a little north, like Margate, right?
Right. Margate, Port St. Lucie,
Port St. Lucie.
Davenport, those areas, I was
Right.
having a conversation with someone and it makes sense, move to those areas now where you can afford a home. And then when the market change, you can potentially sell that property and then purchase something that you can afford in the
Correct.
desirable area
Right.
that you would like to be in.
Right. And something I always tell the buyer that your first purchase don't need to be the dream home.
For sure.
You can buy something that, doesn't meet all the criteria, but it meet the major ones. And then you can put some sweat equity in it. You can, repaint it, remodel it. You can do a couple of stuff that is going to, help
Increase
the
the
value
value.
going up.
Right. Okay. Another thing that you probably want to consider is to help buy down the interest rate.
That's
right?
I'd say to the clients, if you can get the seller, don't tell the seller to reduce the price. Ask them to contribute towards your closing costs and use that money to buy your rate down. You're gonna be in a way better situation. Right.
Yeah.
A $20,000 decrease on the price is not as beneficial as the seller contributing $20,000 to your closing that you can use and buy your rate down.
Okay. What another thing we'll also recommend that you continue to know what your credit score is and keep abreast of it and
Keep it
score up.
high.
Right.
As high as you want to get into this market. If you really need to buy, you want to make sure that your credit score is as high as possible. Not saying it needs to be 850, but because of where the rates are, right? If you go into this process with a 550 rate score, that interest rate or that points that you need to pay at 550 is going to be substantially less if you're at 700 or 720. So make sure you clean up whatever needs to be done on your credit prior to actually jumping in.
Okay. And another thing we also want we're going to recommend that you do is to try to save up some money so you have a larger deposit down, right?
Correct.
You want a larger down payment. That will help lower your payment over
payments.
the
Correct.
Yes.
Yeah.
So, save up. I don't know if you get an extra job
Correct.
or,
gifts. You can get gifts
right.
from family members.
There you go.
Inquire about down payment assistance
Assistant.
programs if that is going to help your process. But whatever your situation is, the more you put down it's going to decrease your mortgage payment, by some substantial amount, and you want to put yourself in a situation where your payment is at a level where you're comfortable. Right? You don't want to be up to your neck in terms of the payment. You definitely want to be able to have the payment where you can relax somewhat.
Okay.
Right?
And another recommendation is to, like we talked about that, mentioned a little bit about it before, to consider asking for funds to help buy down your rates, right? And to
Definitely.
lower the price.
Right. So, as mentioned before, lowering the price is good, always. But it even better is having the seller contribute towards your closing, because that funds a 6% interest rate as opposed to a 7% interest. That 1% in interest rate is going to impact your payment a lot more than if the seller gave you a $20,000 discount on the price.
Okay.
So I always recommend going towards getting the money towards closing costs. All right. Weigh your options, right? So if you definitely need to buy, obviously you have to buy if wherever the situation. But if you don't need to buy, I say to people, maybe rent for another year. I have clients that call me, I think I'm ready, and once I start asking them some pertinent questions, it's okay. Let's eye 2025. I mean, give yourself a year and a half, save up some money, put yourself in a better situation financially, right? Work with an agent that knows the market, knows what they're doing. It's important because that agent is going to negotiate with the seller's agent on your behalf. And so you want someone that understands the market that the local market that you're in, and really understand what they're doing. And so that they can help to get you into a better situation.
All right.
All right.
Okay.
Now, those are some recommendations that we have for buyers. If you're definitely looking to buy in the next 2 to 6 months and you're in the market, or you're in the market currently, these are some recommendations that we think can help you to put yourself in a better situation.
Okay.
Now, let's call the sellers to the front of the room. let's give them some too, because we have some recommendations for the sellers too.
And the first thing we're going to start with is to be patient. That works for both sellers
sides.
and buyers. Yes.
Homes are
Right.
not jumping off the market
as
like
they
they
were
were a
before.
year, 2 years ago.
Great.
So
Unless it's a desirable property and
Right.
it's turnkey and it's everything that a buyer wants, and they're going to come in and compete and offer you above asking price. But if it's
Right.
not, like Chris said, they're not jumping off the market like they were before. So be
be
patient.
patient,
Right.
definitely.
The right buyer will come along.
Yeah.
Right.
Price your homes correctly.
And that comes with working an agent who knows the market
Correct.
that you're in.
Don't overprice these homes because they're going to only sit on the market for extended period.
Yes.
If the true value is 300,000, don't price it at 400,000.
All right.
Because if you do that, all that's going to happen in this market, because again, the Californians and the New Yorkers and the Boston people from Boston, they're not running to us right now. Most of those people are staying put where they are. So you're selling typically now to locals.
Mm-hmm.
These locals don't have the 400 and the 500,000 to spend on a $300,000 home. Right.
And we forgot to mention, like, I think something that will factor into that too, because right now the insurance in the state of Florida has gone up
Correct.
tremendously.
Correct.
So buyers are taking that into consideration as
Because
well.
that's going to only increase their mortgage payment.
Right.
Right. So again, price your house correctly. If you want your home to sell, don't overprice it, because if you overprice it, you may run the risk of it sitting on the market for extended period.
Right. Most definitely.
Mm-hmm.
All right. Make the home move-in ready as possible.
You
And-
can't stress that enough, because that is what is going to
Dictate
dictate
how long.
how long it's on the market and at what price you're able to sell it.
Right.
So if it needs a little touch up, little painting, little some little sprucing up, do that.
Right.
Right. Gone are the days when people are buying in California without even seeing the property. They don't care
Right.
what it looks like. They just 500,000. No, it's not. That time has passed.
Yes.
Most
Definitely.
people now are going to come and they're going to do inspections. They're no longer going to be waiving inspections. So make sure that your property is in a move-in ready situation, so that it is going to attract more buyers, and therefore by attracting more buyers, you're more than likely going to get a higher price at a faster pace.
Yes. All right. Also, sellers, be prepared to offer concessions. So you're going to give sellers credit to help pay towards the buyer's closing costs. Like we mentioned before, probably potentially buying down the buyer's interest rate. So
Right.
as a seller, be flexible in those terms where, be able to offer credit towards the
Right.
buyer.
And that is going to even make your property, your listing more attractive. Because
Right.
if you put an initial listing, you're not the seller but the seller's agent, that they're motivated and they're consider giving X amount towards closing, that is going to entice more buyers to
Buyers.
look
Right.
at your property, as opposed to another seller who's not willing to do anything.
Right. Also, another thing too for sellers, most of the time sellers don't want to do, say, an FHA or a VA loan. You need to be open where you consider all type of
All
all
loan
loan
types.
types,
Correct,
right?
correct.
So
This is not the market for you to be super picky. right?
Right.
It's not yet the buyer's market, but that's the direction that we're seeing it moving into. So as a seller, our recommendation is consider everyone. All the offers that comes
Definitely.
in, you want to take them into consideration.
Right. And also, again, be prepared for the home to be on the market a way longer time now than it was like 2 years ago, right?
Definitely,
Because, like
definitely.
Chris says, that we have buyers now that are more, they're not rushing to,
They're not rushing to
yeah,
buy.
rushing to buy at
Very
all.
cautious buyers.
Yeah.
So if you list your home, do expect it to be on a contract in 2 days. Gone are those days. I mean, there it is possible, but we're saying that's not the norm now. That's not what we're
Right.
seeing from where we sit as professionals. So if you're putting your house on the market, especially now, closer to the end of the year, you want to be patient. You probably is more likely it's going to sit on the market for a little longer than normal. Be patient. Have that conversation with your listing agent and make sure that you're making the right decision.
Right. Okay. And
Yeah.
finally, hire an agent again that's and that understands the local market that you're in.
Definitely.
Okay.
That can be stressed enough that if you hire someone that doesn't understand the market that you're in, one, they're going to price your house outside of where it should be,
Yes.
and that is going to result in fewer buyers, and more likely going to sell your house for a lower price than you should. So
Right.
make sure you hire an agent that knows what they're doing and have experience doing it in your local market.
Okay.
All right.
All right. So we're gonna.
So
close up.
that's kind of bring us to the end of today's
Sure.
show. It was a short and spicy one. We're basically giving you an update as to where the market is at, so that you can make decisions if you're a buyer or you're
Or
a seller.
seller.
All right. So just to recap, some of what we discussed. So the first thing, the real estate market has changed. It's not what it was 2 years ago.
Right.
So you have to adapt. If you're a buyer, you have to understand what that means for you. If you're a seller, you also have to understand what that means for you.
Right.
Right.
And also price your home again correctly, right? Don't overprice a home. Price it correctly so that way it doesn't sit on the market for like 30 or 60 days, where you sometimes see most of these properties are, right?
Right.
Also, as consider buying down the interest
If
rate.
you're a buyer.
If you're a
right,
buyer or a
right.
seller, consider contributing to the buyer closing costs and helping the buyer buy the interest rate down. Right.
Right.
Okay. So just be flexible and in terms of that.
All right. Based on projections, we're seeing that 2024 may see
Prices starting to go
prices
down.
start coming down. All the analysts are saying, we should
Prices
be
are going to be
seeing
reducing.
some reduced prices in the coming year, 2024, 2025. So if you're selling, if you want to get the best price, now is possible.
The time to put your house on the market.
The time to put your house on the market. Because if you wait until 2024, 2025, you may not be getting the same price points that you're seeing now.
That's what they're
All right?
projecting. Right.
And definitely.
Right.
And for buyers, you have to consider alternative kind of mortgage products. An example, an adjusted rate mortgage is something I recommend in this market because the rates are high. It's more likely that the only one way they're going to go in the next 2 years is down. So you don't necessarily have to have a fixed 30-year fixed mortgage. You could have a 5-year arm where it stays at a level, and I'm sure, not sure, but I'm hoping that within the 5 years of you having that mortgage, you're gonna start seeing the rate coming down, and at that point you can refinance and get yourself into a more
Right,
fixed.
so you don't have to marry to the rate now.
Right. So don't get caught up
Right, with the interest
with the
rate.
interest rate. The interest rate is just a tool. See how you can use the current market to your benefit. Again, rates are a little high, but they're alternative, or there are ways of getting you into your based on your situation. If you're working with professionals who knows what they're doing and have the experience to, to get you to where you need to be.
Okay.
All right. So we've come to the end of our show. As usual, feel free to reach out to us. My number is 786-985-1383.
And mine's is 786-214-1436.
Right.
Please continue to like, subscribe, turn on the notification bell so you don't miss when we post a new episode.
Right.
Continue leaving your comments, and thank you for your support. And we enjoy doing these shows, right? So even if you want to see us talk about a certain topic, right, just
Definitely.
leave it in the comment section,
Right.
and we will definitely
We'll definitely do
a
a
video
video on
on
whatever
that.
topics.
right.
Right.
And if you do like, again, continue to share and subscribe.
All right.
right.
Have yourself a great week, and we'll see you next week with episode 10.
10. Yay.
All right.
10.
All right. Bye,
Bye
for
for
now.
now.